Okay, well, thanks everyone for being here. I'm Jim Pooley. I'm Deputy Director General for Innovation and Technology at WIPO. I'm from Geneva, but I have spent the first 36 years of my professional life about 20 miles north of here in Palo Alto as a practicing lawyer before I came to WIPO 2.5 years ago. I also have with me today Daniela Benavente of INSEAD, who is a lead researcher and project manager of the Global Innovation Index, which we are very proud to be presenting and discussing with you today. We also have Alistair Nolan from OECD and Bukhari Savadogo, Manager of Education, Science, and Technology Division at the African Development Bank. So what we're going to try to do today is introduce to you this product. It's a very interesting product, and it's one that will keep on coming because this is not a one-off event. This is actually the 4th year that the index has been produced, and if you were at all familiar with any of the earlier ones, you will find out and recognize that it changes from year to year. And that's one of the important messages that I'm going to leave you with today. But let me first tell you why it is that WIPO, which focuses on the global systems of intellectual property, is interested in this and has partnered with INSEAD on this very important product. Our interest, first of all, is at the macro level, understanding more about how innovation works so it can guide the conversations that we have in Geneva and around the world about the role that intellectual property plays in producing and sustaining innovation through the commercialization process. And we also work, of course, with individual countries and individual actors to help them succeed, and this kind of information plays a big role there too. Now, measuring innovation, and in particular, measuring the linkages, which we all have been discussing here and recognize are so important to producing sustained innovation over time, is very, very hard to do. And the search for proxies, the search for appropriate metrics on what affects innovation outcomes is an ongoing process. And as we've all seen in the discussions that we've had so far in this conference, there are many moving parts in the innovation machine, and the machine differs depending on what perspective you are looking at it from. And we see new parts emerging all the time. So what that means is, in this process, no matter that you may look at this and you may see the news reports about this project as reporting rankings of countries, it's not really about the rankings. All right? And this may say, that you may hear this as don't look behind that curtain or don't think about that elephant in the room. But that's our job here. It's to get beyond the rankings, which will change a lot from one year to another. Why? Because the issues and the factors are dynamic. We are still learning in this process about all the myriad factors that affect how innovation actually works and how we can best and most usefully measure them. So the rankings will necessarily change, and that's not really a bad thing. Rather than look at the rankings, what I will urge you all to do when you get this material, and we have it all available for you in a much easier format to lug around, just some USB keys that will have all the information you need, is to focus not on the rankings but on the analytics, to extract from the data the learning that comes from all the work that has gone into this product. So with that, now I'd like to turn it over to Daniela, who will introduce us to the product itself. Daniela.
Good evening. I'm Daniela Benavente. I'm originally from Chile, based in Geneva. I work for INSEAD eLab in close collaboration with WIPO on the Global Innovation Index. What you could read on the website of the Global Innovation Summit was that the vision of the organizers was to make geography relevant in 20 years. And one of the questions they had was how do we cause innovation to happen, measure it, scale it, and use it to create jobs and sustainable inclusive development? I would say we share those goals with the GII because that's exactly what we do with this product. This is a ranking of countries that is put together with the collaboration of several actors. We have INSEAD, WIPO as co-publishers, it was said, but we also work with experts from 3 knowledge partners, Alcatel-Lucent, Booz & Company, and the Confederation of Indian Industry. We have an advisory board of 11 experts from several international organizations such as ITU, UNESCO, ISO, academics from Russia, India, South Africa, and other countries, the Internet Society. And in addition to that, the ranking itself was submitted to a statistical audit, an independent audit by the Joint Research Center of the European Commission to give a confidence interval on the ranking and say how reliable its ranking is, because as it was mentioned before, the ranking is really not the ultimate goal of this product. So we have global coverage with 141 economies, 16 were added this year compared to last year. A broad scope, we include 84 indicators, 78 of which are hard data. There is an effort to capture innovation in emerging markets and to provide an indicator of performance according to stages in development of countries. We also have an indication in each country profile of the strength and weaknesses of each economy in these 84 indicators. The methodology is transparent and replicable, and the framework is adjusted for relevance and timeliness every year. We're very proud to say that more than 91% of the data dates from 2009 or later. This is the overall framework of the index. So the Global Innovation Index is measured as the average of 2 sub-indices, the Innovation Input Subindex and the Innovation Output Subindex. On the input side, we have 5 pillars that capture 5 dimensions: institutions, human capital and research, infrastructure, market sophistication, and business sophistication. On the output side, we have knowledge and technology outputs and creative outputs, that is, only copyright-related industries, trademarks, and online creativity. 2 sub-pillars were added this year to the index: ecological sustainability and online creativity. And that had quite an impact in the ranking itself. So the top 10 on the Global Innovation Index are Switzerland, Sweden, Singapore, Finland, the UK, the Netherlands, Denmark, Hong Kong, Ireland, and USA. These are countries that you would expect to see at the top 10 of a ranking of innovation. I have to add that actually the top 3 are exactly the same as last year. This is a very robust result. And 9 out of the 10 countries were already in the top 10 last year. The efficiency ratio, let me go back to that slide. The efficiency ratio is another index that we provide, which is calculated as the ratio of the output subindex over the input subindex. It is expected to revolve around the measure of 1, and it aims at measuring who is doing very well from the resources they have. And on that index, the top 10 are China, India, Republic of Moldova, Malta, Switzerland, Paraguay, Serbia, Estonia, Netherlands, and Sri Lanka. So you already see a different angle out of exactly the same data of the GII and we'll see some more now. So the GII has 8 main results. I'll go very quickly over all of them. One first result is that although there is a new dynamic of innovation around the world, there are deep and persistent innovation divides. First, along income lines. Scores of high-income countries are really well above scores of middle and low-income countries. That is something that we already saw last year, but this year again. High-income countries are doing particularly well in institutions and knowledge and technology outputs, for example. There are also some regional divide. Northern America, which includes in the ranking, includes only Canada and North America, so only 2 countries, comes first as a region. Then comes Europe, with 41 countries though. South East Asia and Oceania comes next, with 17 countries. Northern Africa and Western Asia, including the Middle East, is doing better than Latin America and the Caribbean. You have then Central and Southern Asia with 8 countries, and Sub-Saharan Africa with 31 countries. So we have a country ranking and a regional ranking as well. But as I said, there is a new dynamic of innovation, and we did one exercise this year that was not included last year, which was to control for GDP per capita. The key chart in the report is on page 24. This is a friendly version of that same report with the name of the countries. And we found 3 groups of countries. So we have the leaders at the top. These are all of them, I must say, high-income countries. But then we have the group of learners. Those are the countries that, for the same GDP per capita, in the vertical, if you want, are doing much better than their peers in that development stage. And the bubble size is given by population, so you can see right away the bigger countries how they're doing, and China is doing very well, India as well. That's a reflection of these efficiency top scores that they got. But other countries as well, like the Baltic countries, Estonia, Latvia, we have really in all continents overachievers. In the bottom part of the chart, we have those countries that are not doing that well, or as well as it would be expected from their income levels. Most of those countries are resource-rich countries. We have all the Gulf Cooperation Council countries in there. We have Mexico, which is not doing very well, Venezuela, Algeria. So there is one pattern there that there is an echo of this Dutch disease that is so often mentioned. So this slide, I'm sure you'll get the copies of this slide. This slide just gives you exactly the same names of these countries, but so at the top we have the leaders and the learners. Then we have the bigger group, which are those countries that are doing as expected, I would say, on the basis of their GDP per capita, and then those that are not doing that well. Here, one important part is that upper middle income countries are usually doing less well than lower middle income countries. That was something that we already saw last year. And we wonder really if there is not some inertia in these countries that already had some jump in development in 20 or 15 years ago, and that now are not really innovating that much. Another result is that hysteresis effects in innovation prevail. So if you stop R&D in times of crisis, you can't really pick it up later without some effect on economic growth. Another key result is that innovation linkages really matter. And the title of this year's report is Stronger Linkages for Global Growth. And we have 10 chapters on innovation linkages, 3 of them thematic, then 3 on the role of internet as a platform for innovation with a special contribution by Google. And we have 4 case studies on the Gulf Cooperation Council, Saudi Arabia, the Russian Federation, and India. So I really invite you to read all those chapters that are quite short. Key result number 5, policy discussions in Europe have to include a focus on innovation, not just austerity, to bridge gaps in the multi-speed continent. We really see that Northern Europe and Western Europe is doing very well on the innovation front, but less so Southern Europe. Whereas Eastern European countries, and particularly the Baltic countries, are really catching up very fast. Key result number 6, there is a special box on the US. It is the only analysis that involves time series. Next year, we'll probably have much more on that. We analyzed 23 indicators to see how the US was measuring up to the top 2, Sweden and Switzerland. So you might see here just a sample, tertiary enrollment, the US doing very well with an upward sloping curve, but less so on graduates in science and engineering, less so on tertiary inbound mobility. These are all indicators that we have in the index. Less so on gross expenditure on R&D or publications and so on. So this is just to illustrate the richness of the data and how you can really get insights on how you measure up with other countries. Here we compare the top 3, Switzerland, Sweden, Singapore, with the UK, the US, and Canada, and you see that out of 21 pillars, there's 7 pillars in which performance are quite similar: political environment, regulatory environment, and so on, the first part of the slide. Then those in which there are some already different performances. Clearly here you see Switzerland on creative and tangible, that's trademarks doing much better than the rest. Singapore, very well on trade and competition. And then we have those 7 pillars with the higher variance. This was made on the basis of variance in scores. And you really see the comparative advantage and disadvantages of each country. Tertiary education, Singapore doing very well, knowledge absorption as well, but less well on knowledge creation, where Switzerland prevails, or less well on credit, where the UK and the USA are really at the top. So this again to illustrate what can be done with this index and the data that we have. If there is any governmental person or anyone interested in having this type of analysis for that country or the region, we can do it for free. Then key result number 7, the BRICS need to renew their innovation drivers to live up to their expected potential. That most of them doing pretty well at the output level, but less well on the input level. And these are big countries. The message here is that probably they have niche markets or clusters or developments at the regional level that are driving their output levels, but those do not really prevail in the rest of the country. And finally, key result number 8, we have to be very humble. We're not saying that this is the ultimate ranking on innovation and these are the ultimate indicators that we should keep, but these are what we found exist. We thought that they are useful to identify good policies, good practices, and for governments to measure up to the rest of the world and see what they can do better. This is one example of a country profile. And I don't see if you, well, we have the 84 indicators, the pillars, and so on. And the strength are the red dots and the weaknesses, the white dots. That's all. Thank you.
Very good. Thanks. And Alistair.
Well, thank you very much. I've been invited to make a few reactions to the release of this report, so I'll just spend a few minutes doing that. But just to say, firstly, that I'm really glad to be at this conference. It's a very exciting event, and it's a privilege to be here. The compilation of this data, the construction of an index, is clearly it's a major undertaking, and I'd just like to offer a few observations first about the value of this kind of exercise, this sort of ranking work. I think this is valuable in part because it can serve to open the eyes of policymakers. I mean, nobody wants to appear at the bottom of rankings, even if ranking isn't the primary objective, and everybody wants to appear as near the top as possible. But I also think that the kind of data which sits behind these rankings is useful for providing benchmarks and argumentation for parties in different countries that are arguing for, that are advocates for reform of policy. I also think that comparative work on innovation internationally is important in itself, simply because despite the fact that we know that innovation is critical to long-term productivity growth, it's still an area of public policy where we don't know really what the optima are. We have ideas about good practices in a number of areas, but optimal policy settings, I think, to a certain extent, we are still in the dark on. So let me make a few observations about kind of building on this work and thinking about where can measurement go in the future. What are some of the challenges, then, of characterizing, calibrating innovation and comparing innovation across countries? I think that this is well known to the authors. The last slide there described this attempt at measurement as trying to hit a moving target. And I think that's very true, that our understanding of what drives innovation is itself evolving. And one of the areas of change in recent thinking about innovation, which I think is extremely fruitful, has to do with the recognition that innovation is not just driven by R&D. There's been since the early 2000s, a body of research spinning out, particularly of the Federal Reserve Board in the United States, which has been attempting to measure total business investment in computerized information, data, software, the entire array of innovative property and organizational capital. So the spending that companies engage in to increase brand equity, to develop new business models, manage their supply chains, and so forth. And this is all being shown to correlate with GDP per capita and productivity change. Now, some of those intangible assets are broached in this report. There's the indicators on software and on R&D spending. But there's some exciting other areas of intangibles investment by companies, which I think we're only just beginning to discover the importance of in the broader picture of innovation, and with respect to which data, especially international comparative data, is still in its infancy. And one of the areas I'd point to here is design, business spending on design. There was a fascinating piece of research came out in 2010, which was trying to measure the value that the iPhone had created for the Apple Corporation. And what they showed was that as of 2010, the iPhone had added $30 billion to the value of Apple. But only about 25%, a quarter of that $30 billion, was attributable to patentable technology stemming from R&D. And the rest was coming from Apple's innovations in design and marketing, which are closely linked, and its innovation in supply chain management. My own country, the UK, is probably the country in the OECD area for which we have best data on business spending on design. And what that data, albeit fragile, is showing is that companies are probably investing twice as much in design as they are in R&D. Those investments in design are highly correlated with innovation propensities. They're linked to export performance as well. And we know that across countries, there's major differences in design registration behavior. Companies in the UK register their designs, they protect their designs far less frequently than do their counterparts in Germany and France. And we're not sure of all of the configuration of the design rights policy settings that lead to this differential behavior. So this is an area where I think data development and further analysis could maybe take us in useful directions. Other things that affect the innovation system are also very hard to measure and kind of calibrate and to put into comparative indicators. One, for example, is the quality of competition policy. Hasn't really been discussed here at this event so far, but competition policy is not so important with respect to the generation and creation of new knowledge, but we know that competitive markets are absolutely key drivers of the diffusion of knowledge. There's technology-specific regulations, for example, which are also very difficult to capture in an indicators framework. Even if you might have a broad indicator on the quality of the regulatory environment in a given country, there is, for example, an issue in Europe at the moment with respect to the fact that cars, automobiles, are ever more laden with computers and software and linked to the internet, and yet these cars are locked into the same mobile roaming contracts as individual holders of a mobile phone. So there's problems about regulation in stifling the emergence of an Internet of Things. Another key policy area that's very difficult to capture in an indicators framework is tax. Again, not really been discussed at this conference so far, but we know that tax, capital gains tax, is one of the key drivers of the extent, the scale of venture capital investment. tax affects the location of IP, the readiness of companies to undertake risky investments, already existing incumbent firms, the extent to which companies invest in training and education, and so forth. So all of these are challenges in terms of measuring and calibrating factors which drive innovation systems. Maybe one last broad point, maybe two last broad points. One has to do with the fact that, in terms of policy thinking, what do you do next after you have an index of this sort? Where do you go if you're ranked highly, or if you're ranked low? And I think that one thing you have to do initially is to unpack the index and look at what's driving your position. But then you also need a lot of qualitative information, which can really only come from field work, from case studies, etc., from being on the ground. And just to give you one example, you may have an indicator which looks at governance arrangements in a given country, but you have to look under the hood to see what these governance arrangements really mean. So all OECD countries try to coordinate science and innovation policy, often through science and innovation councils, but many of these work in very different ways. In Korea, for example, their National Science and Technology Policy Council just tries to sort of bring about coherent interaction amongst ministries which may be contending. But in Switzerland, ranked number 1 here on the index, Switzerland's modeled its entire innovation effort around being world leaders in science. And so their technology council nationally is largely staffed by academics who are dealing with science issues. So these operate in different ways. My very last point would be that even countries which are ranked near the top, like Sweden, I was recently working in Sweden, although they are global leaders across the available metrics around innovation, when you go there, you still find that in terms of the operation of programs and institutions, there's often a lot they still have to do to get right. In 2009, Sweden had the third largest venture capital industry in the OECD area as a share of its GDP, after Israel and the United States. But you go and you look at how venture capital operates in Sweden. It's diminished hugely in the wake of the crisis, but you find a lot of public money going into funds which are publicly owned and publicly managed, really anathema to what we understand about global best practice. So even in a leader like Sweden, you're going to find innovation policy deficits which need to be rectified. So just to close, I would say that it's a Herculean task, what's been done, constructing this index, putting this together. I think it's a real contribution to debate around these issues is very valuable, and I would congratulate the authors. Thank you.
Thanks, Alistair and Bukhari. A few comments on the perspective from African Development Bank.
All right, thank you. I was asked to react to this report from the perspective of the African Development Bank, especially from the perspective of human development. And so I looked at the report, and beyond the report, I tried to see what lever, as far as human development is concerned, what lever can be actioned to foster innovation in Africa. So I will start by saying, by invoking a popular saying, that if you want to grow a tree, you have to nurture its roots. Likewise, if you want to foster innovations, you have to nurture innovators, that is, people. And this can be done partly through education and training. The key point of this Global Innovation Index, as far as Africa is concerned, the key points are that there are some challenges, but there are also some encouraging signs. The challenges are that most of African countries are ranked at the bottom. There are 4 African countries that are ranked among the top half of the ranking. These are Mauritius, South Africa, Tunisia, and Namibia. There are many explanations that are given, by the way, in the document. But there are also some encouraging signs. And some of these signs are that the internet, which is available to all African countries, to the entire world, the internet is both a facilitator of information. It makes information available to every country, and it's also a catalyst for innovation. And sub-Saharan Africa has seen a tremendous increase in internet use, which is a very good and very hopeful sign. But let's look beyond this report and address quickly the issue of how we nurture innovator through a comprehensive human capital development strategy. The African Development Bank is in the process of precisely developing such a strategy with 3 focus areas. One area is to help develop skills for competitiveness and jobs, especially to address the issue of youth and employment, which is a big, big problem on the continent. A second focus area is to get more value for money, meaning that all the resources that are allocated to social services such as education and health, all this money are spent efficiently and effectively. And a third focus area is to ensure a better social inclusion and cohesion. And a part of this human capital development strategy is what we call a new education model in Africa, which is intended precisely to help groom the next generations of innovators in Africa. This new education model in Africa, NEMA as we call it, has 6 key dimensions. Dimension number 1, it's ICT-based. Number 2, it has very strong linkages with the labor markets. Number 3, it encourages public and private partnerships in education delivery. Number 4, it's designed to develop critical thinking. Number 5, it is highly participatory, and it is evidence-based. Just to give 2 quick examples of what we try to do, I will give you the case of the African Virtual University, which African Development Bank is funding, and the Rwanda, we have a Carnegie Center of Excellence working with Rwanda to bring the best of Carnegie programs right in Africa. So this is just a quick glimpse at what African Development Bank is doing in the area of human development to help foster innovation in Africa. Thank you.
Thank you, Bakari. All right, at this point, we'd like to open it up to the floor for questions, comments. There is a roving mic, and yes, right back there. And let me ask who would like to be first. This was, in fact, as Alistair said, a Herculean task, and the work continues. I think, yes, in the back there.
Yes, thank you. Alejandro Cruz from Costa Rica. I would like to know, in the case of our country, we went down several places, probably too many for our own taste and for the taste of the press in my country. Even though, let me say that in Latin America, we came as a 3rd place country. First Chile, second Brazil, very close to us, and we are number 60 in the Innovation Index as the 3rd Latin American country. When this was published just a few weeks ago, the press was very hard on us. I have to say that innovation is probably the main topic now with the Ministry of Science and Technology. How could we explain the big difference between last year's results and these real results, especially when we have been able to finance more innovation processes at the firm level? Thank you.
Well, thank you. Thank you for the question. That's a very good question. I'm glad at least to hear that the conversation is going on. Daniela, would you like to field that one?
Yes, thank you for the question. I have here, we have one of the annexes in the report is an analysis of changes in rankings. Because we changed the framework, we have the drop or increase in rankings due to the changes, adjustments made to the framework itself, and the changes due to relative performance. And I stress the word relative because it's not just absolute performance. Costa Rica may be doing better than last year on several indicators. On a few, we'll do less well. But what really matters for ranking is relative performance. If Costa Rica is doing well, but everybody else is doing much better, then it will fall in the rankings anyways. So the case of Costa Rica, it fell 15 positions, I see here. 4 of them were due to adjustments to the framework, so not really performance. 2 positions dropped because we included economies that were not there last year. And the rest is really relative performance, 9 positions in which it fell. I can do for you the analysis of the values for each of the 84 indicators last year and this year, and you will see exactly where the problems are. But that's all I can say at this point. It's not just performance, and it's not just absolute performance. That's the message. It's relative performance and adjustments to the framework and the addition of countries.
Okay, well, again, thank you for the question. I think that's a good illustration of the reason why, when we look at a report like this, we have to dig in and look at the underlying data. Yes?
So until last week, I thought Singapore was very innovative, and I know they support entrepreneurship, they give free money. And then surprisingly, I was in Beirut the other day and talking to the advisor to the Prime Minister, who had traveled to Singapore to copy the model. Anyway, she said that, her name is Salam Yamut, she said they interviewed entrepreneurs and said, how do you like the support from the government? And the entrepreneurs actually said that it hurts the ecosystem because they make it too easy. That's really interesting news to me. But I wonder, what are Singapore and Switzerland and these countries doing that everybody here can't copy? I mean, they're not reinventing the wheel. And Chile spent $5 million to build an ecosystem. Why can't every country do that?
Danielle, you want to start it?
Or
Any of the other panelists want to take that on? I mean, one of the things that we've heard here so far through the conference is there isn't a one-size-fits-all solution, and many approaches are not easily portable. And that's another reason why you need to get into the data with respect to each country, follow and see what it has been doing that works for it and why, to understand what might or might not be portable. Danielle, you want to follow up on that?
Yes, on the top 3, as I said, these are exactly the same that we had last year. This is a very robust result. We have confidence intervals for the rankings. Switzerland is ranked 1, 90% confidence interval, 1 to 1. So 1 no matter what. And actually in various iterations of the model, it always came at first. And I'd say the strength of Switzerland is that it have a very balanced profile with strengths all over it. You will see weaknesses anyways because we defined it that way. Like the 10 indicators in which Switzerland is doing less well, you will find 10 weaknesses anyways and 10 strengths for Switzerland. But even if you check on those rankings, Switzerland is doing very well anyways. Sweden, second, 90% confidence interval, 2. Very robust result. For other countries, and one example I was given is Rwanda. Rwanda is ranked 102nd, but the 90% confidence interval is anywhere between 98 and 131. And the situation is that at that level of income, scores are very packed. They're very close together. So you might have a change in the ranking, but the scores are really, really close. So if you do well in one indicator, you may jump 1 year from the other 20 positions easily at that level. It is much harder for high-income countries. that also responds a bit the question from the person from Costa Rica.
I mean, maybe a couple of random observations, not very kind of structured, but a few thoughts is that, I mean, there are many elements of innovation ecosystems which I think are highly copyable, maybe can be adapted rather than saying adopted. And I think that we understand a lot about good practice in a number of things like the way to operate support for venture capital, the way you can use the tax system, broad framework conditions around a lot of things around intellectual property, but some regulatory questions as well. So I think those are some of those are copyable, but a lot of what makes countries successful has to do with really long gestating, long-term investments as well in the science base, in the skills base. It's not an accident that Sweden and Switzerland, Finland are very near the top. You see their results on the PISA rankings, for example. The generic skills of 15-year-old, literacy, numeracy, problem solving, they're very high. Huge investments in skills on the part of the Singaporean authorities. So these are, Switzerland has a world-class science base which has taken generations, hundreds of years to build up to its current status. But I think that there are also some factors which impinge on innovation, which can take a long time to turn around as well. I think that inequality in some societies is a fact that when you're excluding so much talent through acute inequality, as is the case in the United States, for example, that must be a drag on innovation potential over time. And that would take a long time to rectify as well.
Good, thanks. Any other questions?
Yes, I think I have a microphone here. My name is Adiba Kremonini, and I'm actually from Sweden. So I thought I would and I've worked in the Swedish innovation ecosystem for over 13 years with incubators and science parks there. So today, Sweden has 55 incubators and 74 science parks, and we're talking about a population of 9 million people, 0.14% of the world population. So that is quite amazing how much the government is funding incubation and science parks, research institutes, and research and development in relation to GDP. But we do have a huge problem, though. We do have all these innovations. We do have more patents than anyone. We do a lot of great innovations, and we have that innovation spirit. We have a great 200-year tradition of innovative companies, like Ericsson, Atlas Copco, Volvo, you name it. You all know pacemaker and the 3-point seat belt, and all those came from Sweden. But today, even though despite all these innovations we have and being ranked top year after year in all these indexes, we are not creating growth companies. We are not commercializing all these innovations. So when do we start to measure how many companies you actually get out there on the market, on a global market? Because I think Sweden would need that to push ourselves even harder to create more growth companies. So I just wanted to tell you that even though we're in the top, we're not creating that many growth companies and commercializing that well.
Well, thank you for that. Let me ask Daniela, has there been any thought given to introducing notions of successful commercialization at some level into the index?
Yes, the Pillar 6, knowledge and technology outputs, is built around 3 sub-pillars. In knowledge creation, the first one, we have patenting, utility models, and scientific publications. So that's really, inventions and research. But then the second pillar, labeled knowledge impact, we have growth in labor productivity, we have new businesses, we have spending on computer software. So the idea is to have all these indicators as proxies of commercialization, precisely. And then the third sub-pillar, knowledge diffusion, takes it to a higher level. We have receipts of royalty and license fees, we have high-tech exports, computer and communication exports, and FDI net outflows. So the idea is how good you are at diffusing all that knowledge to the world. So these are all proxies because we don't really have indicators of outputs per se, but we think that we're sort of capturing those 3 dimensions pretty well.
Good.
And I must add that you're right. Sweden is second in knowledge creation, but 21st in knowledge impact, but 5th in knowledge diffusion. So there is some sort of specialization, I'd say. Definitely. Yeah.
Great, thank you. We're nearing the end of our time, so I just want to emphasize, again, this is a work in process, so we would very much like to receive your reactions to this. You can send them to Daniela, and she will certainly take them into account as they're doing her project for next year, right?
Exactly.
Which has already started. Again, would you please join me in thanking the panelists and thanking all of you for being here. Okay.